The market lost about 2.79%. Checked in on that a few seconds ago. That is now tapering a little bit to 1.19%. Dangote Cement is down nearly 2%. Guinness Nigeria PLC almost 4% in negative territory. GT Bank is losing about 4.5%. And Dangote Flour down about 3.5%. Owando is gaining about 1.01%. A very nasty Monday on the Nigerian market. Let's talk to David Adonri, who is the Managing Director and Chief Executive Officer at High Cap Securities, live to us from our stock exchange trading floor in downtown Lagos. David, it's good to have you on the program. Welcome to the show. This is looking not a very bright, but
it's a pleasure.
Bearish day to start this Monday. What's the sentiment at this moment?
You see, the stock market, which is the barometer for measuring how well the economy is performing, has actually been on a sad beginning as we start a new week. The market has continued this bearish trend, just like we witnessed last week. The major sectors of the market are all down, just in line with the figures you have reeled out. Initially, Dangote Cement had actually almost fallen completely and was bottom up. The stock was trading at about at a loss of over 7%. But apparently there is a rescue activity on that security, which has reduced the loss or decline to about 2%. And that has impacted on the market, which was down by almost 3%, but it's now down by just about 2%. The market is not over yet, but we believe that the end of the market will tell whether it's going to be bearish again today or the market can recover. But as the barometer of the economy, the signals that are emanating from the capital market here on Custom Street, the signals are not very, very encouraging.
You are expecting the
country's
industry.
Yeah.
Yeah, you're expecting Dr. Okechukwu Inelama, who is Nigeria's Minister in charge of Industry, Trade and Investment, today for the closing bell. If you folks will have some interactions with the Honorable Minister, what would you like to hear from him, and what would you think to tell him? He's coming from the executive side of government.
You see, the major challenge that the capital market is facing now is actually coming from the economy itself, because there's been a paradigm, which is that the economy has been managed by a focus on public sector drive, but whereas the sentiments that analysts are expressing and investors are looking forward to is for an economy that is market-driven with market-friendly policies. So far, the policies that are coming up from the managers of the economy appear to be hostile to the capital market. For instance, if you take the tax policies that are coming from the fiscal authority now, they appear to be seriously discouraging to the activities of issuers in the economy. And market operators are also reeling under some tax policies that are unusual. For instance, there is a policy on minimum tax that is charged on the capital base of market operators, which is abnormal. And we also understand there are serious tax policies, like the recent policy on alcohol, which is inimical to the activities of those in the alcoholic beverage industry. And so from the fiscal perspective, the policies appear to be hostile to manufacturing and by extension to the market. And these have all combined to reduce investors' confidence in the market. And don't forget that there is also a post-election dissonance in which several foreign investors have stayed away from the market, and a lot of low purchasing power by domestic investors. They have not been able to come in to fill the gap left by the exodus or the inability of,
Yes, David,
yes,
we appreciate your coming in here on the program. Of course, we understand this is the final hour to trading. Of course, it's less than an hour, about 35 minutes to closing bell. You need to get back to the trading engine. Thank you so much, David Adori, for coming in on the program, the Managing Director at High Cap Securities. And let's check in with the crude oil before we wrap it up. A supply cut by OPEC, U.S. sanctions against Iran and Venezuela, and Libya oil crisis. Of course, you heard in the news already that the U.S. has warned the forces in Libya to stay away from the capital, Tripoli. Now, that is beginning to happen. Now, oil prices is taking that in the chin. Oil prices now hitting the highest level since November, 5-month high. International benchmark Brent futures, $70.62 per barrel, about 28 cents higher. U.S. West Texas Intermediate crude, 30 cents higher, $63.39 a barrel. To prop up prices, OPEC and now affiliated allies like Russia, what you call OPEC +1, have now pledged to withhold around 1.2 million barrels per day of supply in the current year. And that's about all for today. We thank everyone for watching. I'll see you again next time. Goodbye from Lagos.